Hello, so I welcome you to this risk management lesson on the Advanced Crypto Mastery course. Okay, so my name is Richard and I'm your instructor in this lesson. Okay, so we are going to discuss risk management in trading and in investment, especially in trading. Okay, but when you learn it in trading, you apply the same principle in your investment. Okay, so risk management is very important and it what differentiates you from a gambler. Okay, so if you want to be a profitable trader, you have to learn how to manage your risk. All right, so risk management is the most important aspect of trading. That's what differentiates you from a gambler, like I said before. So a gambler doesn't care about how exposed he is to risk. Okay, so that's why you see gamblers going into the gambling market with their all their money. They stake everything they have. They don't analyze anything. They just have to, take the chances. Okay, gamblers go by chance, but as a trader who is not gambling the market, you apply risk management. Okay, that's what differentiates you from a gambler. So in this lesson, we are going to see the three components of risk management. Okay, so this is the theoretical aspect of this lesson. We'll be going over to the practical aspect after this one. Okay, so here are the key components of risk management. Okay, first is leverage sizing, the second is entry and exit levels, and the third but not the least is the stop loss and take profit. Okay, so you must have heard about these things, alright? So where the action and result comes in is putting them into practice. Okay, so leverage sizing is knowing the amount you have to borrow from the exchange in order not to be too exposed to risk. Okay, so in crypto trading, whether you are trading the futures market or you are trading margin, all right, one thing is common: you have to borrow funds from the exchange. Okay, that's your leverage. Okay, so taking leverage is very important and very profitable if you know what you are doing. That's if you are managing your risk well. But in that case, you also have to be very careful with the amount of leverage you are taking, because the more you take leverage, the more you are exposed to risk. One times leverage, that means if the market goes against you by 100%, you get liquidated, which is mostly impossible in most cases, that the market will go against you by 100%. Okay, so 2 times leverage means that when the market goes against you by 50%, you get liquidated. Okay, so let me explain liquidation here. Liquidation is the period where the funds the exchange borrow you is about to get affected. Okay, so instead of the exchange to burn themselves out, they will stop your trade, and then whatever they have lost from the market, they will use your funds to make up for it. Okay, so if it's as a point where they don't get anything to make up for again, that's the liquidation level. So they're going to take all your funds and close your trade out. Okay, so nobody wants to be liquidated. That's why you have to be very careful with taking leverage. Okay, so taking 5 times leverage means that if the market goes against you by 20%, you get liquidated. Okay, taking 50 times leverage means when the market goes against you by 2%, you get liquidated. And taking 100 times leverage means that when the market goes against you by 1%, just 1%, you are out. Okay, so 125 times leverage means that if the market goes against you by 0.8%, you are out. Okay, so you don't have to wait till the market goes against you in all of these situations. Okay, that's why you have to apply risk management, which is what we are learning here now. Okay, so there are exchanges that even allow you to borrow more leverage up to 250%, and that's actually bad. Okay, so know the amount of leverage you are borrowing from an exchange, and know the risk involved in that leverage. Okay, so the best practice is always always to go with a small amount of leverage, so you don't get burned in the market. So the next one is your entry and exit level. So your entry level is the most crucial thing, the most vital level in your trading. Okay, so this is the level whereby you come into the market, and from this level anything can then happen. It's either the market starts going up or is going down. Okay, so knowing your entry is very important. Okay, so some people take high leverage, but then they have to make sure that the entry is confirmed, confirmed, so that once they enter, the market starts moving in that direction. Okay, so whether you are taking low leverage or high leverage, you should watch your entry level. Okay, and next thing, watch your exit level. Okay, in this exit is where new traders kill themselves. Okay, you see a trader who has opened a trade and is making up to 100% profit. He won't like to close the trade because he still see the market going up, so he just wants to keep the trade on. Okay, so and before you know it, the market starts reversing and he starts praying and all that, and at the end of the day, the market will take everything he has made. Okay, so in order to avoid this, you need to define where you come in and when you go out. Okay, you can say after 10% profit I'm out, after 100% profit I'm out, after this and that. So you have to apply principle. Okay, so this is risk management. Okay, not getting yourself exposed to risk. Okay, so no matter how good you are in technical analysis or fundamental analysis, if you're not managing your risk, you can never be a good trader. Okay, so that's why it's very important to manage your risk. So the last one but not the least is your stop loss and take profit. Okay, so here, instead of you to wait for the market to liquidate you, you jump out and save some bucks for yourself. Okay, because he who fights and runs today lives to fight another day. Okay, so there's no point in waiting for the market to crash on you. So once you get your validation and invalidation level, you set your stop loss and take profit. Okay, so we are going to see these things in practical and how to set your stop loss, your take profit, how to get your entry and your exit, and how to choose your leverage and all that in the next lesson. Okay, so in the next video is going to be about practical of what we have just discussed. All right, see you there.